Are you planning for taxes in retirement? And are you thinking they might be more than you're planning for? Well, we're going to talk about that in today's video. Hi, I'm Larry Sprung from Midland Financial, where we strive to bring joy to your money journey. Are you planning for taxes in your retirement? Well, according to a report, 70% of retirees said they were somewhat knowledgeable or not knowledgeable at all about taxes in their retirement. So how do we avoid this? And are taxes going to cost more than you think? Well, taxes are something that you have to plan for, just like everything else. Many of us go through the year getting our income, getting our dividends, getting our interest, doing what we do. And then in March, we gather all these documents, bring them to our accountant, and our accountant does our taxes, and they inform us if we owe money or we're getting a refund. Now, that's certainly a way of doing it, but is it the best way? I would say a better way is you should be planning for taxes all along the way, up into and through retirement. And what that means is planning on a quarterly basis so that when March comes around, it's not a surprise. You have a very good idea of what you're going to owe in taxes from a standpoint of whether you're getting a refund or you're actually going to owe money at the end of the year. It shouldn't be something that is just figured out in March, but planned for all year round. In terms of retirement, there are some things we have to consider because now we may have different income sources than we had previously when we were working. For example, when we were working, we might have had a W-2, some capital gains, some dividends and interest, and some of those things may still be around in retirement. But as we enter retirement, there are going to be additional taxable items that we're going to have to account for. When we turn 73, you're going to start required minimum distributions. That's going to add to your tax liability, and there may be different planning strategies to attack that. As we approach retirement, if we have a lot of money in qualified IRAs, we may want to consider approaching Roth conversions to potentially limit our tax liability and the amount that we're going to have to pay when those required minimum distributions kick in. Another thing that we have to consider as we enter retirement is, are you familiar with IRMA? As your income rises, your Medicare premiums will increase as well, and it's a hidden tax. It's not something that shows up necessarily on your tax return, but it is something that you're going to have to pay for Medicare purposes. That is essentially an added tax. And if you're not planning for that properly, it could be a major surprise. So at the end of the day, there are many different avenues that are going to change over the coming years as you enter retirement, and additional income sources or income streams that are going to factor into your tax liability. And it's going to be important that you plan for these things appropriately so that you are not surprised by your tax bill come March. So when it comes to tax planning, there are important things that we have to do, and planning is vitally important to have a plan in place as pre-retirees or even retirees to have that plan in place. But we can't be so rigid that we're not prepared and ready for changes. As we've seen recently, tax changes take place. They take place fairly often, and we have to be prepared for those changes. So if you're familiar with the One Big Beautiful Bill that just passed, a couple of notable changes for retirees are, increased SALT deductions, state and local taxes. It's something that's been capped at $10,000 over the last several years and now is being increased to $40,000. That can have an impact on your taxes. Another notable change has been an increase of the standard deduction. There's an additional deduction of $6,000 for seniors, those over the age of 65. Now, there are certain income limitations to that, but in many cases, that is going to give many seniors an additional tax break that they haven't had previously. So at the end of the day, it's important that we have a plan in place for what our tax liabilities are going to be today and in the future, but you have to be in a position where you are flexible enough to make adjustments to that plan over time, so you're putting yourself in a position to be prepared in that moment for what your tax liabilities are going to be. So we know that taxes exist. We know that we have to plan for them in order to be prepared, and we know that they're going to change over time. So what can we do about this? Well, there are some definitive things that we could be doing on an annual basis to improve and lessen our tax burden. So some of those things that you might want to consider are, for example, a Roth conversion, converting IRA money to Roth IRA money, paying the taxes today, and essentially you're lessening your burden in retirement because your required minimum distributions will be lower. It's a great tool. Another thing that should be considered and looked at is tax loss harvesting. At the end of each year, we all have something in our portfolio that has not performed the way we wanted to or expected it to do. And maybe there's a loss there. And there might be an opportunity to sell that holding at a loss and utilize that loss to reduce our capital gains exposure for the year and lessening our tax burden. And number three, if you're charitably inclined, there may be an opportunity for you to increase your charitable deductions this year or your charitable contributions in order to lower your tax burden. And these are just a few of the techniques that can be looked at on an annual basis, and there are many, many more. As we've talked about, planning is personal. It's just that personal, and you might have some strategies that work specifically for you. I hope you found this helpful, and if you have more questions, I'd love to have a conversation with you. Links are in the description below. Be sure to hit subscribe because we're going to have plenty more videos on topics like this: personal finance, retirement planning. I'm Larry Sprung from Midland Financial. Until next time.
The opinions voiced in the Larry Sprung YouTube channel show with Lawrence Sprung are for general information only and not intended to provide specific advice or recommendations for any individual. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Investing involves risk, including possible loss of principal. No strategy ensures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Investment advisory services offered through CWM LLC, an SEC-registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.